Good morning, everyone, and thanks very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address r@fxcm.com. Today being Monday, the 6th of December 2021. Just going to bring up our high-risk investment warning. I'm going to keep this on screen for a few moments. And here's our market commentaries disclaimer. And just finally, the references. So we'll look at market scope for our analysis on the DAX chart, but let's just go through to the cnbc.com warning note, and let's just go through what we need to know in terms of the news. And it begins, European stocks expected to open higher. Investors are monitoring developments around Omicron and Bitcoin volatility. European markets set for a positive start to the trading week, although the picture is mixed on a global level. Stocks in Asia Pacific dropped on Monday as investors monitored Bitcoin prices after they fell sharply over the weekend. Maybe we'll take a look at Bitcoin as well. We didn't do it on Wednesday, so it's probably, we'll do it now and we'll do it on Wednesday, but we'll do the DAX first. Meanwhile, oil prices jumped during early Asia trade, rising more than 2% in Asia after falling most of last week. I did see that Saudi Arabia is raising prices on oil. Saw that on the news this morning on Bloomberg. Stateside stock futures were higher even after a losing week on Wall Street as investors ditched equities amid concerns over the new Omicron COVID variant, and the Federal Reserve's move to tighten policy. At least 15 US states have detected the Omicron coronavirus variant now. Heavy selling in tech Friday extended to cryptocurrencies. All right, so we're going to have to, I think we're going to have to try and figure out what's going on here. All right. Bitcoin traded around $57,000 on Friday, but by Saturday they're falling to around 43,000. So that's 30%, right? It's a third down from 64 to 43. Is my math right? It's about a third down. By Sunday, the world's largest crypto had recovered some of its losses, but it still traded below 50. Okay, it's currently trading at 49. So there's been a bounce here. Data releases in Europe include Germany industrial orders in October, Eurozone Sentex index for December, and first estimate of Greece's GDP in the third quarter. All right, I'm just thinking we're probably going to need to include, because my references don't include, but I think I'm going to add sort of verbally, so beg your pardon, but I think we're going to have to take a look at trading view here. And I think we're going to have to take a look at trading economics here as well. Just to kind of start the week. So yeah, I think that's what we're going to have to do. I'm just bringing it up on my other screen. Okay, so here's trading view. Let's pop that there. And here's trading economics. I'm sorry I didn't reference these, but just please take note of the webpage trading economics and trading view. But I think we're all familiar with these pages. All right, let's go through to the chart here. And hey, Howard. Yeah, I had a good weekend. Hope you did as well. Yeah, and so there's been a bounce on Bitcoin. I think we've got to take a look at Bitcoin. We'll see if we can kind of figure out what's going on there. Let's start off with the DAX. And then anybody that wants to stay after we finished with the DAX, we'll cover Bitcoin. Let's start off with the weekly DAX here, and let's take these out. Okay, so this is the weekly chart. We identified this. We identified the support. Okay, so we identified the support last week. It's held. Last week's candle, let's just talk about the sentiment that we get from last week's candle. So let me put in an arrow. And it's what we call a spinning top in terms of candlestick analysis. But let's just understand what that actually means. So bulls try to take price up, bears try to take price down. Neither were in control at the end of the week. At the end of the week, we actually closed flat. So what that suggests is uncertainty. Now, I think that we've got to see the uncertainty in the context of the previous week, which had this gigantic sell down. So this is the week where Omicron hit the headlines. I think by and large, there was other news items that week, but I think it was by and large that Friday that really sort of had that panic selling in, pushed DAX down. Last week there was confusion. The bears were thinking, should we follow through? They tried. They didn't really dominate. The bears thought, well, maybe this is an overreaction. Let's try and take prices up. Well, they didn't dominate either, and kind of ended in this sort of equilibrium, neither side gaining control. However, I think that the support is something that is positive. It's held. Clearly, if we break the support, that is the bearish development. But the fact that this support held here, what it gives us the potential for a swing low. So we mentioned this last week. We've got this candle that's actually got a lower low than this big, long, really ugly looking candle. This is a vicious looking candle down. And as we suggested last week, just the sheer range here can cause all sorts of problems in terms of analysis. So this actually did us a favor, in my opinion. Although it did hit a lower low, it is given the opportunity for a swing low. So we'll just draw this in here. And the idea is, of course, in order for there to be a swing low, we've got to see three conditions. We've got one out of the three, and that one may disappear at the end of the week depending on the price action, and that condition is, as we've mentioned, the lowest low. So if we get a big sell-off this week and it takes out last week's low, well, that's going to nullify this candle. But until then, it is the condition that we are monitoring, and we call this the reference candle, and then we've put in a let me change this to it's better. All right, so and then we've got this line in the sand. If price moves above last week's high, that's condition 2 out of 3. And then if we close above last week's high, that's 3 out of 3. That's the big one. Without condition 3, we have nothing. Clearly, condition 3 incorporates condition 2, and effectively those validate condition 1. So condition 3 is everything. It's effectively the close above last week's high, but keeping condition 1 intact. In other words, we've got to have the low for this week higher than last week's low. So that's the big test for this week. It's nice to see perhaps that the RSI is curling up, and if it moves above 50, well, that's what we want. All the bullish action will take place with RSI above 50. So the fact that it's below 50 is problematic. And of course, the stochastic, which is lagging a bit, but it has to get back to this this 80 level. Once that happens, and if we've got this swing low, I think the panic may be behind us. Okay. We're going to have more to say about that. That's why I brought up TradingView and trading economics. Let's just go through to the daily here. Okay, so we're still in this area of weakness. So let's just tie this in with the weekly. We need to get above last week's high. Well, in order to get above last week's high, we've got to get out of this area of weakness. We've got to get into the neutral area. So that's something we can monitor on a day-by-day basis, as opposed to looking at the weekly, which we can only really get a feel for at the end of the week. So we need to get out of this area of weakness now. Let's just analyze these last few candles, and the way we'll do it, we'll go to this over here because it's more easier to see when there's no Bollinger's over it. So we drew in these lines last week to kind of test sentiment. Let's extend these. And Friday was there was a time on Friday where we went below this candle. So let's just talk about this over here. Okay, just want to talk about that. So I'm looking specifically at this candle as the reference candle. So that's the highest high in at least 3 candles. That's condition 1. Okay, if this is the reference candle, this is the reference candle's low. Condition 2 was hit on Friday. Price was taken down below this reference candle's low. Remember what I said, without condition 3, we don't have anything. So the market's lucky. We actually closed off of the low here. So no bearish reference candle. So we're going to keep on monitoring. And if we do close below, we can actually just push this down slightly. So now we're using this as the low. If we go below this, that's bad news. And the other reference candle we're keeping an eye on is this one over here. And I think the idea is it's going to move above here. So we're kind of in this, over the last 4 candles, we're in this, you can see we're moving sideways, no real traction, which is exactly right, okay? Candle of uncertainty, go to the daily. Just moving sideways, uncertainty, no side taking control, no bulls taking control, no bears taking control. We're still within this very fragile area here. So we'll just carry on monitoring in terms of these 2 lines over here. And if we go down to the hourly, well, the hourly is looking positive. Okay, so we do have the EMAs crossed over bullishly, and we've got the stochastic crossed over bullishly. No overbought here, no overbought. But we know the story here, and the story is as follows. If the bulls are to make any sort of headway, we have to hit this 80 area and hold. So if it rolls over, that's no good. That means the bullish momentum has faded. If it hits 80 and rolls over, that's no good. Momentum's fading. It has to hit 80 and hold. And we've got to just think of that in terms of this very uncertain environment we're in. So we've got this nice level of support underneath us, but we don't have really anything besides that. The indicators are still weak. The daily chart is moving sideways. So when we come down to the short-term market participants, they're trying to take the price up, and they may do it. Well, they've got to get above this resistance, And the only way they're going to get above that resistance is if they hit this 80 and this 80 holds. So what's the takeaway there? The takeaway is very much the same as last week. We are in a high risk environment. Markets are inherently risky, but I think that there is heightened risk here. And that means that stop losses and risk management are still a key focus, the key focus when you are entering your position, even if you want to go short. So over here, you can see the market participants are trying to go long, but they may be faded. And if you think, well, you know, this is looking very weak, we're in the area of weakness, I might go short. Well, you've got this underlying support. You still got to use your stop losses. You still got to use your money management. So just be aware of that. Now, before we go to Bitcoin, just a few things to say about stock markets. And I think this actually is going to lead into the discussion on Bitcoin. And let's just go through to this is now trading view. Let's go through to our weekly, and I'm going to go through to our yield. All right, so just now, in my opinion, is going to be a really key determinant, in my opinion, of the trajectory of NASDAQ, because we saw in the CNBC note, NASDAQ was under pressure. And I actually think this is going to be a really important metric for Bitcoin as well. The 10-year has come down. Okay, it has come down, and last week I did a sort of an article. Where are we going here? Because we didn't complete this head and shoulders. Okay, so the pattern never completed. So that opens up the possibility that maybe we're not going to have higher yields. In fact, we've got this lower peak, and are we going to move below this trough here? And of course, you can see that the possibility exists. That a push down in yields here, I actually think would support NASDAQ. I think my opinion is that possibly supports cryptos as well. But I think the market, even though there's this big weekly sell down here, I think the market is perhaps looking at this as a potential overshoot. The non-farm payrolls, let's go through to trading economics. The non-farm payrolls, the headline number was really disappointing. The last number came out at 210. There was a forecast. I think Reuters had it at around about 524, S&P around about 581. So at first glance, this looks as if it is a really bad number. And I would have expected if it was a bad number, to have yields come down. But then over the weekend, we saw Bitcoin coming down, and Bitcoin coming down here has got me kind of thinking, because it's an alternative asset, right? So what we need to do here, and this is really, I think, going to be the key metric going forward. If we go through to the labor here, okay, so I'm on trading economics under US labor, something remarkable actually happened on Friday, something truly remarkable, and that was participation rate. is jumped. Participation rate has jumped, and that's huge. This is kind of subsurface. This is under the surface, right? So the headline number looks, oh, wait a second, this wasn't a good jobs report. No, it actually was a really good jobs report because we're getting this participation rate up. And if we go through to our 5-year, you can see the tick up here. And this has really been, I think, the big problem in the US. This participation rate hasn't moved. Well, it's starting to move. Now, one data point doesn't make a trend. I mean, if the Omicron virus sort of takes hold and this participation rate falls, then the trend never took hold, and that's going to raise problems again. But the fact that this has ticked up and the fact that we've seen Bitcoin coming down, well, I'm thinking, well, this is probably something to keep an eye on, because I think it's going to have to turn up. If the labor market is got to a point where participation's kicking up, there's no stopping the tightening of monetary policy now. And if there's no stopping the tightening of monetary policy, yields will need to tick up. And if yields need to tick up, okay, that's going to support the dollar. How does it tie into Bitcoin? Bitcoin's priced in dollars. Okay, so if we go through to Bitcoin, so you can see Bitcoin's been hammered, and there's this big gap over here in our data because it's jumped. It doesn't have the weekend trade, but you can just see from Friday to Monday this big gap down, and I think this is reflecting. I think this is a reflection, because this is not really such a big move from there to there. From there to there, it's not really such a big move. But then I think as the market started actually looking at this non-farm payroll number and seeing, wait a second, participation's up. Yeah, the Fed's going to see that, and we're not going to be able to get we're not going to be able to hold off on tightening very much longer. And I think, boom, we got knocked down here. So I think that if the tightening goes ahead, inevitably US dollar is going to benefit. I don't see how it can't. So I think the way to just look at this in light of weekend action. And by the way, we can bring gold into this as well. Let's just bring up gold. Okay, so gold was under pressure over here. This is where he testified, Jerome Powell, in front of the Senate. We've got this red candle here, and it's priced in dollar, right? So let's just do basic mathematics here. Okay, so we'll just make some really simplified assumptions to drive home a point here. Okay, so let's say, so just excuse the ridiculousness of my figures, but it's going to drive home a point. So let's just call Bitcoin, let's just say Bitcoin's valued at $10. Okay, and let's just say the US dollar is valued at 1. Okay, and we could also say gold is valued at, we'll call it $10 as well. It's the same thing. And the US dollar, we'll just put in as $1. So we've got this. So we've got this Okay, Chris. Okay, I'll come to your comment in a moment. So let's just go here. So XAU, that's the numerator. USD, that's the denominator. Go to Bitcoin. Bitcoin is the numerator. US dollar again is the denominator. So US dollar is the denominator in both those. Just basic mathematics, right? Let's just say that there is a tightening in monetary policy. Interest rates go up. So what's going to happen to the US dollar? So, well, if then you want to invest in US securities because they're going to pay high interest rates. Well, you've got to buy those in US dollars. So ultimately supports US dollar. So let's do some math. So you've got originally it's 10 divided by 1, which equals 10, right? So, and then gold was the same thing, 10 divided by 1 equals 10, right? But let's just say that the interest rate changes dollar to $2. So then we've got 10 divided by 2 equals 5. 10 divided by 2 equals 5. So the value of the numerator, which in this case is Bitcoin, and in this case is gold, drops because of the strength in the denominator. So what could possibly save Bitcoin and what could possibly save gold? Well, there has to be some sort of intrinsic value or some sort of demand for Bitcoin, and there has to be some sort of demand for gold. And the question, of course, comes down to who's buying cryptos, why are they buying cryptos, does it hold any value? And if, let's just assume that it does, let's just assume that it does. Well, if Bitcoin jumps to 20 and the US dollar changes to 2, well then we've got 20 divided by 2, which equals 10, which is the same as the first ratio. So the only way Bitcoin can hold is if its price either keeps up with dollar appreciation or outpaces dollar appreciation. Same with gold. And that means now, well, is there some sort of intrinsic fundamental value? And we'll think about that. At the moment, the momentum that's being generated on the denominator side is intense. And I think that commodities and alternative assets priced in dollars may feel the pinch there, unless their own intrinsic value is driving it as well, which is difficult to tell. It's difficult to tell. So copper, you would be able to measure in terms of demand because it's an industrial metal. Bitcoin, to measure the true demand for Bitcoin is a little bit more difficult. It comes to kind of almost like a sort of a intense debate where one side's going to argue this, one side's going to argue that. Neither side is going to really be able to prove their point of view. Whereas with industrial metals, well, you probably could. So it's very difficult, in my opinion. Chris just writes there, maybe a word on the US dollar as well as comparisons to Japanese yen and Swiss franc. Well, I think just before we even look at those, Chris, automatically, my opinion is the US dollar is kind of the wild card. Yeah, it's the X factor. The tightening of monetary policy automatically is going to draw funds to the US dollar, whereas Japanese yen and Swiss franc are. US dollar is regarded as a safe haven, but that's just based on the the strength of, I guess, the US treasury, you know. Whereas Japanese yen is a safe haven for a different reason. It's a safe haven because most of Japan's debt is actually held by the Japanese, right? And so people see it as a safe haven. Also, the Japanese, Japan's had no real interest at all. So they just send cash out to invest in other yields. But as soon as there's some sort of market event, I'll just repatriate that cash. And that's how it measures as a safe haven. So if there's some sort of market event, you'll just see money flooding back into the Japanese yen because of the nature of the investments. And that's what you've seen here. But barring any of those, I think the US dollar is probably something that we should keep an eye on. And just taking a look at the Swiss franc. Swiss franc also is regarded as a safe haven for different reasons. Switzerland is a neutral country, so that in of itself makes it attractive as a safe haven. And the Swiss franc, I don't think it still has a gold backing, but I think it was the last of the currencies to hold out, and it had at least a portion of it that had a gold backing. And that added to its safe haven status, which is just stuck with it. So, but again, you can see that when there's a market event, money flies into the Swiss franc, like over here. So those are kind of the market dynamics. The likelihood of further market events, by the way, Chris, I think are quite high. So if there's market events that drives cash back into Japan, I think it will naturally flow back into Switzerland then. But besides that kind of happening, I think the US dollar is looking very, very interesting, given that the participation rate is starting to move after more than a year, you know. So very interesting. I hope that answers the question. If there's any questions, go ahead and type those in. Any questions? Otherwise, everyone's got my email address. You can certainly send me an email. And thank you very much for joining. And I will speak to you all soon. Thanks, guys.